Telekom is not a one-bet company. We are a multi-bet opportunity. You know, from all the angles which we are playing, in the US with the synergies, in Germany now with our fiber attack, when it comes to the 5G deployment, the B2B opportunities where we as a former incumbent have all the right to play and to grow. This is a multi-bet opportunity, and hopefully we came across that way. We are accelerating, and if you would ask me today, what is the headline of our capital market strategy? It's acceleration. It's acceleration. Yeah, welcome everybody. Where are you? And hope you're doing well during these difficult times. It's a little bit like results day at school today, but as well about the question about what kind of job do we have in the future. And this is what I'm going to talk about, and it's a pleasure that you are spending the time with us today. I have to admit, you know, it's an easy one because it's my 4th Capital Markets Day. And looking hindsight, I'm very happy about, let's say, how we performed over the last 3 years and looking at the results we have achieved. And this is due to an outstanding team in this industry. I think to an outstanding strategy of very focused, you know, an approach of delivering of what we have promised and even, you know, sticking out to the others in this industry and outperforming them as well from a capital market perspective. And that leads me already to my first slide, which is, you know, the full Monty of all the messages in a nutshell. And for the ones who don't have time or want to do their sports in the afternoon or who want to, let's say, hang out with other companies, here we go. Just digest this slide. With this, you got it all. This is, by the way, you know, how we are looking into the future. And that is built on 2 pillars. The one is the organic pillar, is the way how we operate in our telecommunication industries. But the second pillar is at least as same importance, which is the way how we think, how we allocate money, and the way how we are organizing the portfolio which we are running. And this all is resulting in the commitments which we are giving for the future. Now, this is what we're doing already for quite some times. And this is our so-called flying wheel. And the flying wheel is very simple. On the one side, we always invest more than our competition. This is the idea, a little bit better, a little bit higher from a quality perspective, which on the other side gives us the opportunity to gain more customers. Gaining more customers on the infrastructure will help us to create higher efficiency, which means the productivity of our network is higher than the ones from our competition. And the higher efficiency plus more customers is, as a consequence, resulting in more profitability, in higher financials, and the higher financials made us able to go into further investments, which is helping us to outperform the competition. To give you just a number, since I'm CEO, I've invested 85 billion without spectrum into this flying wheel. This is, by the way, 37 billion more than what Vodafone invested, 37 more than what Orange invested, and 27 billion more than what Telefonica has invested. And this is, by the way, at the end of the day, this is the consequence why we are doing better than the others. Going forward, we are accelerating. And if you would ask me today, what is the headline of our capital market strategy? It's acceleration. It's acceleration. We have a sound foundation, and now we accelerate on the KPIs. There is a revenue CAGR of 1 to 2%. Looks like the other one, which we had previous one, but behind that is a revenue growth, a service revenue growth of 3 to 4% commitment, which we foresee. Our profitability is going to increase by 3 to 5%. So this is more than what we were able to deliver on last time. So we are very confident that we can accelerate on the profitability of that company. The last time we were talking about 8 billion free cash flow for this group as our ambition level. Now we are handing out a commitment of 18 billion as the minimum which we foresee for our 2024 ambitions. And on top of that, we even want to be leading, more leading on the capital returns, which we are delivering on our network. So you know that the ROCE is one of our core KPIs. It always was. It was Deutsche Telekom, by the way, bringing it into the telecommunication industries. And now we are achieving and we are aiming for 6.5% return on capital employed as a minimum for the foreseeable future at Deutsche Telekom's infrastructure. This is the organic growth and the flying wheel which we foresee. On top of that, the capital allocation is for us very important. It always was. If we cannot live with only the organic growth, we have to find ways to generate value outside or within the portfolio. The first thing what we are doing is we invest more to be leading in 5G across the globe, the transatlantic position which we hold. And we're going to be the number one in fiber investments in the European footprint. This is something where Dominique and Srini will talk about. On top of that, network is nice, but monetization is the must if you invest this amount of billions into the infrastructure. The second topic is focus on structurally healthy markets. For us, a very important thing. If we do not find a market which is structurally in order, if we find a market which is over-regulated, over-competitive, we are even willing to leave that market. We did that already in the past. Think about Albania, think about Romania and other markets, but this is a clear commitment that we do not find an impossible game. So therefore, we are trying to focus on fixing a structural issue, and if we can't, we are even willing to exit markets. On top of that, maybe the biggest news for today, we are clearly committing to get the majority in the US within the time frame which we have laid out. Our voting proxies will expire in 2024, but until then, we will make sure that we have a clear ownership of 50% and above in the US environment. The US is part of our story, is part of our footprint. We are the transatlantic leader in the telco markets. On top of that, we commit to deleverage the company into the investment grade commitments which we have always laid out in the last capital markets. This is due to the merger and the integration costs that we are out of it in the US right now, but we will come back into this corridor soon, and that is another commitment which we are giving. And on top of that, we have waited and we have looked, we have improved the profitability of our Dutch business. We have restructured the market. We found partners with Tele2. We have integrated the simple business. Now it's the time, after this super value accretion, to think about what is the best way to monetize our asset in the Netherlands. That doesn't mean we have to do that to the other stuff. It's an add-on which we see to optimize our overall portfolio. But we will move into the market with this asset right now, checking out what is the best way on the Dutch side. And we have improved our profitability on the tower side as well. We have taken the European towers out of the business as well. And we will work on monetizing towers as well in the upcoming future. And we will talk about that later on, how we're going to do that, what kind of scenarios we foresee, and why it's now the right timing. It's a kingmaker asset which we have on hand. And we think with the current multiples, the current valuations we see in the markets, now it's the right time to understand, what we can do with this asset in the best manner. These two pillars result into outstanding profitability. And to be very clear, our focus is not anymore to compare ourselves with Vodafone, Orange or Telefonica. They are anyhow focusing on free cash flow and other KPIs. Our industry, fast-moving consumer goods. This is areas like Henkel and others who are delivering constant earning per shares increases in their business. And that's the peer group which where we want to benchmark ourselves. And therefore, we have changed our logic from a free cash flow logic, a full consolidated free cash flow number, which doesn't give you an indication about what we are able to contribute to the community, but we are now focusing on the earnings per share as the main KPI, and we will increase our earnings per share from €1.10 to above €1.75 in the upcoming 3 years. This is then the basis for the dividend accretion you will get from Deutsche Telekom. And the basis of that one is that we are willing to contribute between 40 and 60% of the adjusted earnings per shares into your direction. This is, by the way, if you benchmark yourself with other industries, I think that's a very fair value contribution. And on top of that, it gives us a leeway to further increase the dividends of Deutsche Telekom in the upcoming years. That said, we know that you need a floor. You need a kind of interest rate for the huge investments you have taken with us on that journey. And therefore, we guarantee a floor of 60 cents as a minimum. This is the storylining of our Capital Markets Day today. Now, quickly going into a review. And I know you know our numbers, but we are proud about what we have achieved. Therefore, this is not an accident. I think it was the consequence of our very focused strategy. We didn't change our strategy over the last years. We amended it here and there, but in principle, we kept pace on one direction, and that made us strong. We didn't deviate. We didn't expand it outside of our footprint. We didn't make adventures, into the over-the-top business models. Nor we did it into the content world. We really focused on our network technology as the centerpiece of what we had. We focused on the convergence, which was for us really a big gain of revenue in the past. And we were very much focusing on the IP migration and the digitization of our service so far. This based into outstanding service capabilities, plus a business class, which is where we enable our customers to digitize their service around the connectivity piece. Reducing the cost, we overachieved our cost commitment from the last Capital Markets Day, and we simplified, digitized, and accelerated our services within the company. Now, these are in a nutshell the numbers. We grow on both sides of the Atlantic. 3% on a CAGR in Europe, 9% on an organic CAGR in the US. So all the business are in growth mode. We invested a lot in sustainable growth momentum. And you see that René Obermann, he was investing in Germany 3.3 to 3.6 billion. We changed that immediately, and we have invested around 5 billion, 5.5 billion in the vicinity of, in the area of Germany alone, 7.5 on a European space. And we have constantly grown this to gain an advantage towards our competition. And on top of that, we had the US investments into a leading mobile infrastructure. We said no. And maybe saying no is more important to all the good stories which I just have crafted. Because to stay focused was very important. And there were a lot of, let's say, kind of things which sounded attractive. Verizon went into the adventure with Yahoo and alike. AT&T went into the adventure with Warner Media and alike. Telefonica went into a 3 billion investment for football rights for 3 years, and so on and so on. We said no to all of this outside business opportunities where most of the people lost billions. We stayed focused on our connectivity plus strategy. And I think this is what we call put your money where your mouth is, than rather trying to build empires. Now, this is the consequence of all of this. Revenue growth from 75 billion to more than 109 billion of today. This is a CAGR organically of 3%, but it's overall a growth of 10%. We grew our EBITDA by 14%, organically by 6%. And we grew our cash flow by organically 14%, 10% overall. These are all targets, these are all achievements which were higher than our originally committed targets, which we laid out at our last Capital Markets Day. We have created a big footprint around sustainability and about ethical standards, and we have a very strong stand in the political arena, especially in Europe, where we are heard with the needs. And I think this is very important, and we go into that one even more. And the last one is, for me, the most important piece. It's something you never see. You always see the CEO, you see Christian, you see some of the board members, and you think you understand the company. Sorry, guys, you don't. You only understand the company if you're going down to earth, going down into the operations of these people. If you're going down to the service people who are going out to the customers on a single day. If you go into our shops. If you go down into the organizational piece. These are the drivers of the change and the transformation of our company. And we were able to change the thinking, the way how they act, the way how they constantly perform into one direction significantly over the last years. 85% of our employees say we like to work for Deutsche Telekom. More than 80% of the people say we recommend Deutsche Telekom as an employer. More than 80% think our brand is something unique. And I want to spend a little bit more time not talking about the next Horizon 1 issue. I just want to talk with you a little bit, what is our vision for 2030? How does Deutsche Telekom might look like in 2030? How can Deutsche Telekom be successful in 2030, knowing that this is still a long way to go? But we have to prepare the future now if we don't want to miss it on a long-term perspective. And I think we are more and more talking about the next quarter, but we should always keep in mind why are we doing things. And therefore, let me deep dive a little bit into a long-term perspective. Now, I cannot give you all, let's say, elements of what we foresee as trends in this environment. And therefore, I'm trying to reduce it to 5 major trends which we have to anticipate if we think about a successful telecom business in the future. And I try to separate into the B2C, the B2B area, into the ESG and the purpose issue around the network and about the services which we have to deliver in this regard. Now, the first paradigm is we will go from a pure connectivity provider, even in a siloed way, into somebody who is enabling different customer use cases with different connectivity pieces. On the B2B side, we will go from dedicated services like MPLS, like voice, into more software-driven enterprise solutions with embedded connectivity. In the ESG world, we will face customers choosing, let's say, products and brands with their feet from a kind of ESG as a hygiene factor to companies who are able to differentiate with ESG criteria. We will deliver and we will see network of networks. So there will be the monolithic incumbent who's providing all kind of connectivities today. He will in the future be an orchestrator of infrastructures, even from third parties. And what we will see a softwareization of the networks in the way how they are organized. They will be disaggregated, they will be cloud-based, cloud-native, and microservices will enable different use cases in these environments. and the prerequisites have to be organized. It will not be any kind a vertical silo as a telco operator is working today. We want to play our differentiation in the convergence piece in Europe. We are strong at that. And we foresee that the FMC penetration in our customer base has a big opportunity to gain more momentum. Best connectivity experience, embracing other technologies, seamless interplay between them, and innovations beyond the core for the services is one thing. Best mobile experience. We always want to have the best infrastructure on mobile and differentiated service. We want to increase, as an example, our first call contact resolution from 55 to more than 62% in Germany. And by the way, we are not talking about idle times, we're not talking about call handling times, we are not talking about deadline compliance. We just talk about the way solve the issue for the customers. And we're doing that already today, stealing with pride from the US, which is called the TEX, the team of experts, which is now embedded and implemented across all the operations we are running. A personalized offline and digital service, first time right, and very much about Heimvernetzung, the connectivity at home, which will enable a seamless and interruptible-free service. Our commitment, 10 million households in FMC. Our commitment, industry-leading growth in branded postpaid customers. We want to win market share in this regard. Extended all-time high customer satisfaction. We want to increase our customer satisfaction, our net promoter scores beyond the level which we have already achieved in all areas where we're operating, and re-innovate the brand under the idea of digital optimism, believing into a future which is getting better through our services. This is what we're working on. Enterprise networks, IoT and security solutions, cloud and digital. And our commitment going forward is we're going to see a CAGR growth of 2% in the B2B sector. I'm very irritated when I see all my telecommunication players around me always talk about negatives. They're all shrinking in that environment. We are growing. We are growing already today. And we believe we can grow at least with a CAGR of 2% in this environment in Germany and in Europe. US, we will double. We will double our B2B market share from 10% to 20% because we have the credibility, because we have, for the first time, a better network than AT&T and Verizon at affordable prices, and this makes us strong to gain market share of these guys. We have built a new team, a stronger team for all the ESG topics which we have. And we even have created a new ambition level for our ESG targets. The first thing is 100% of electricity coming from renewables already this year. So every kind of energy we are using in our footprint is already today on 100% renewable energy. This is already, I think, a big step, and it costs us millions, digit millions to get there, but I think it's worth doing it to have a green network. Now the next step, which is new. On scope 1 and 2, we want to, let's say, have a net zero own emission by 2025. Now you might question, what are you talking? This is electricity, but we still have a fleet. We still have buildings who are consuming energy in this regard, oil and other things. And we are now working how we can reduce even this emission to zero. So that's the scope and our commitments toward 2025. And then we have up and downstream energy consumption, the way how our technology is getting produced, handsets, routers, all this kind of stuff. And we have the end customers consuming all the products of Deutsche Telekom. We want to make sure that the net zero emission is achieved through this value chain at least by 2040, which is at least significantly ahead about, let's say, taxonomy and the targets of the European Commission and others. This is the scope 3 where we're working on. That brings me to the core of the core, our network. And what you see here is today, we have, as an example, our fiber situation in Germany. 5% is our FTTH position, 83 is FTTC, and then we have still some ADSL. We have 100% or more or less ownership of this kind of services. We're going to change that, and we're in the middle of this transformation. 60, 70% of the infrastructure we will own, and it will be fiber. We have made a clear commitment that we are now developing a significant acceleration on the fiber build-out in Germany. We had 600,000 last year. This year we're going to 1.3, 1.4 million. The year after to 2.1, and then we go to 2.5 million households on an annual basis as a run rate of the infrastructure. This is what we do as owners of the infrastructure. There will be as well external money going into networks, which we embrace whole by, which is extending our footprint. And in the financial envelope, which we have laid out, by the end of this year, we will have 90% 5G coverage already in Germany. So that shows you the advantage of what we have created in this environment. Network in IT. Digitize, digitize, digitize. The way of Open RAN, the disaggregation of our network. So the way of running network from a software perspective, than rather having it in a very decentralized way, is the next thing. And this in a kind of agile and cloud-native IT. Our IT has significantly improved over the last years. The time to market has come down to numbers which were even not close to our expectation when we had the last Capital Markets Day. So this was my journey, in a nutshell, about what we are doing. We are very, very ambitious in how we see the future. And the headline, as I said, it is acceleration. Acceleration. Revenues, 1 to 2%. Okay, you know that number, but nobody's interested about revenues from handsets. Service revenue matters. The utilization of the infrastructure matters. 3 to 4% growth. So we believe in a significant growth on the service revenue side. EBITDA, the group is going to grow by 3 to 5%. This is 2% more than what we said last time. Adjusted EBITDA grows by 5 to 6%. This is significantly more than what we said last time. Free cash flow today, 8 billion, 24 beyond 18 billion. Another 10 billion in the year 24 on the cash flow which we are generating today. And ex-US, we're going to bring it to the 4 billion here. Adjusted EPS, we go to €1.75. And the ROCE should be beyond 6.5%. The Capex envelope is defined. Ex-US 8.2 billion is the vicinity on how we are investing. And indirect costs should get reduced by 1.2 billion. The shareholder remuneration based on the EPS with a payout ratio of 40 to 60%, which gives a perspective to grow our dividend significantly over the next years. Look, I think Deutsche Telekom is not an accident. The strategy is something which we work very hard on it. It is supported from 250,000 people in this organization. I commit that we, again, will deliver of what we have promised. We see the future as a growth future. We see us positioned very well from a portfolio and the markets we are operating. We have a differentiator which is around our infrastructure. We have an idea about how we are developing this company towards a new layout for the generation 2030. And with this, I'm very optimistic that we will create more value than the other telcos.
So where is the German business right now? I think the German business is in a really solid, good place. We've delivered reliable, predictable financials on the back of solid operations. And through this, and all of this, despite the fact that we've gone through a fairly large transformation, one of the biggest that I think any of the incumbents in Europe has gone through, the IP transformation, which gave us its own headwinds. And I'll talk in more detail about that. But where we are is a really solid foundation. a place that delivers solid financial results, a great experience, a really good brand, and a solid operation. Question is, where do we go from here? Now, this is a question I've been asked often within the organization over the last 7 months, and often in German. And so that leads to one of my favorite German words, Beschleunigung, by which we mean acceleration. And so the vision really for the next 4 years is to take the solid foundation and accelerate from there. What does acceleration mean? Accelerate in terms of building out the networks for the future, accelerate in terms of our revenue across consumer and B2B, but also accelerate in terms of our internal digitization, so that the combination of all of that creates an acceleration of EBITDA that self-funds the fiber rollout. And last but not least, use all of that accelerated EBITDA, allocate capital well, so that it's not just EBITDA, but also return on capital employed that accelerates. So it's a story of acceleration built on a solid foundation, which you can see has a lot in parallel with the way Tim was laying out the story for the group as a whole. Let's start with fiber and how we accelerate. Now, I already talked about this at our Q4 earnings call, where we laid out our target of 10 million homes by 2024, with getting to, with our competitors, 100% fiberization of Germany by 2030. Now, since then, I've spoken to a lot of you, and typically there are 3 questions. The first one, I think Andrew was kind of subtle in the way he phrased it, but how do you know 10 million homes is enough? Is there another Capex warning coming around the corner? The second one I've dealt with is, tell me more about your fiber strategy. How do you decide where to roll out? What's your strategy? And the third one typically is, how do the economics of fiber work? How does this contribute to monetization? So let me deal with them one by one. Let's start with, is 10 million homes the right number? We are convinced 10 million homes is the right number because we believe that's the number we need to get to above 60% infrastructure share. Let's go to question 2, which is, how do we think about our strategy for rolling out fiber in Germany? In many ways, it follows exactly the same principles of supply and demand. Now, the way we think about Germany, firstly, is to start de-averaging it. Let's start with the quadrant on the top left here, which is areas where we have an FTTC network and there is fiber competition or coax competition more likely. This is typically in the large cities, so the Berlins, Hamburgs, etc. of the world. And here also a lot of customers live in the multi-dwelling units. So how do we decide where we roll out here? How do we actually scale this? We start with the supply side. So the most important thing here is to absolutely make sure that you get the municipalities on site. Berlin, great case in point. We committed to rolling out 1 million households in Berlin because we have a deal with the city where they have made massive improvements in their permission process. They have digitalized a lot of it. That helps take out cost. That helps cut time. Let me go to the third question, which was, how do we think about economics of fiber? 3 big factors driving the economics of fiber: ARPUs, utilization, and Capex. So obviously a fourth, which is market share gain, which we will have in some areas, but I'm going to focus on these 3 right now. Let's start with ARPU growth in retail, right? Now, our retail ARPUs have followed the earlier principle I was talking about, which is customers upgrade 1 step at a time. And as we rolled out more and more vectoring, people moved out from 16 to 50. That's why we saw a 5% ARPU growth from 18 to 20. As we roll out fiber and add to that infrastructure, it will fuel the ARPU growth. Equally importantly, driving down Capex efficiency. We are committed to reducing our Capex per home passed by 25%. Let me be clear by what I mean by that. That is Capex per home passed like-for-like areas. Obviously, our overall Capex per home passed depends on our mix. So if we roll out more urban, we have lower Capex per home passed, more rural, higher Capex per home passed. But on like-for-like basis, we will take it down by 25%. Is that a pipe dream? Not really. Quarter 1, we are already running at about a 5 to 7% efficiency. So we're already beginning to really move the needle so that by the end of the period, we will definitely be at a place of 25% lower Capex per home passed. One of the biggest forces that's emerging for me in Germany now is the flood we're seeing of businesses beginning to digitize. Things like the European Recovery Fund, with 20% of it allocated to digitization, will only help. But we're seeing, especially post the pandemic, a huge push towards digitization. And there's a unique opportunity for us in B2B to be at the center of this. Now, having talked about the digitalization of our customers, I want to now talk about our own digitization. View of digitalization is full stack. It's not just about the front end. The principles of digitization apply across the entire stack. Claudia will talk about that in more detail tomorrow. But it equally applies to the back end, it applies to our IT, and it applies above all to our network through disaggregation, cloudification, and automation. That sort of covers all of the 5 big areas of acceleration. I'll move on now to the outcome of all of this. Right? The combination of driving B2C growth from loyalty and households to being the chosen partner for the rising wave of digitization in B2B, to driving digitization within our own company, and having built a solid foundation which gives us tailwinds now, enables us to accelerate EBITDA growth from the 1.9% you saw to the 2.5% to 3%. When you put together this accelerated EBITDA growth with real discipline around capital allocation and asset management, some examples. As a result of IP migration, next year we will switch off our SDH platform. That will give us 50 million savings in indirect costs. We are now retiring our 3G network. Mobile network, we have 6,000 sites that we will share in white spots across us and Telefonica and Vodafone. That plus all the Capex efficiencies I've already talked about will result in, as Tim said earlier, a 50% growth in our return on capital employed. So you have a business here which is growing, creating great terminal value with 10 million homes of fiber by 2024, and still creating value each step along the way, not just with ROCE greater than WACC, but with a ROCE that is growing. And that truly is what acceleration means.
Thank you, Hannes, and good afternoon, everybody. I'm really happy to be here in my new capacity of board member Europe. And I'm sure you remember, 3 years ago, Srini was standing here and was talking about turning around Europe. I can tell you that today, I'm very proud to say that the turnaround has been done and that we are today a leading large-scale European telco, and on top of it, a very fast-growing European telco. So the whole challenge we have today is how do we write the next chapter? How do we accelerate that growth? And what we want to do is really go to long-term sustainable growth by focusing on customer centricity and on digitalization. We have opportunity in the B2C area. We want to scale fiber. We want to upsell customers in fixed mobile convergence, grow revenue per household. We want to improve customer service even further. We want to grow in B2B. There are several markets where on B2B you have still lots of opportunity, and we will grasp that because we will also converge telco and ICT product in the European region. So let's start with a review over the last 4 years. If you look at that, I mean, these are the figures of 2020. We are an 11 billion turnover European telco if you look at the region as a standalone region. We deliver almost 4 billion EBITDA, close to 2 billion cash. If you take those figures in a standalone European landscape, we would be around the 7th biggest telco in Europe, far ahead of Iliad, of KPN, of Telia. But on top of it, we are one of the fastest growing telco. You see here 13 quarters of growth in a row. Growth coming from around 1/3 net margin growth, 2/3 reduction of costs. I will go one by one through those parameters. If we look at the revenue, it is both value and volume. Very important, and you see the acceleration over the last year. The value has been achieved by upselling customer on the mobile, but also, pushing the fixed mobile convergence and the volume. Another thing we have been doing, and Tim has highlighted it, we have been able to put one new home passed in fiber in 2020. It was the first year that we have been able to get to this number, but our intention is really to go forward with that number. And you see here some figures, 22% coverage, which is quite significant. But what's for me is even more important, it's not just home passed, it is homes connected. The homes connected, 30% utilization of our network, 1.7 million homes connected on fiber already in our footprints. So if you look at then all the promise that were done back in 2018, I'm very proud to say that we have delivered. All measures are green, being measures on the customer side, the consumer sides, the business sides, and the financials. I have highlighted most of them, so I think we can really be proud of what has been achieved in Europe. So let me go quickly through some of the elements. The first one was everything around digital telco. You've seen it's the one app, it's how you manage your products, your contract, how you do payments. But from there, you can imagine to build a lot more services in there. And that's really a route that we'll be looking at. The second pillar was everything around broadband. We have one firmware for all the countries, so it means that we can get quite some advantage in procurement. On top of it, we have the RDK layer, which enable us to build a lot of services on top of that. You've seen some of them, parental control, guest Wi-Fi, but from there, you can imagine that you can build a lot of different home solutions on that platform. If we look at TV, the same. One firmware for Europe, building on the Android IPTV platform, and from there, you are able to really get one of the best UI, aggregated content, voice, search engine, which are harmonized and where we can really offer all our customers state-of-the-art content viewing. And the last bit is also a very important one. All these new digital platforms have been built with one data lake where we are able to store a lot of data from the way our systems are working with our customers. From there, we are able, through data analytics, through AI, to really see what are potential problems, and we can do predictive maintenance, predictive action, so that we are really increasing the satisfaction of the customer because we avoid a lot of fault. But on top of that, it's a way to drastically reduce the cost. And so that's then my last slides before we come to the ambition level. I hope at least, I've been able to convince you that Europe is probably a bit an unknown or under-evaluated jewel within the DT footprint, that we are strongly growing, that we are strong in execution, we are growing in customer, we are very strong in cost reduction, we have a highly digital infrastructure we can leverage, we have strengthened our portfolio. We are investing a lot into fiber. We are investing in 5G. We have secured the spectrum in most of the country at very good conditions. We still have a few countries to go, but we also think that we will be able to get spectrum at very decent price. So these all enable us to continue to grow. We have 13 quarters of growth behind. We want to further grow, and we commit to a higher figure than on the last CMD. We want to have an EBITDA growth between 1.5% and 2.5%. We have a very strong cash generation, and I think that's very powerful, that we will even increase going forwards to 57% of EBITDA. With a stable Capex, it will give us a cash growth of around 4 to 6%, so quite a significant number. And for the first time this year, in 2021, we will have a return on capital employed that will be superior of the weighted average cost of capital of the region, and we will further grow into ROCE going forward.
Our mission is to be the best in the world at connecting customers to their world. And our strategy to get there isn't complicated, but it is differentiated. We plan to simultaneously deliver the best network and the best value for businesses and consumers, something that has never been done before in our industry and something that only T-Mobile can aspire to as the leading pure-play wireless company. Customers shouldn't have to choose, and at T-Mobile, they don't. Add to that the differentiated customer experiences delivered by this customer-loving team, and you have a formula that allows us to pursue our simple yet audacious vision to become #1 in customer choice and #1 in customers' hearts. We'll get there by focusing on 3 strategic pillars. First, building the world's best 5G network and delivering product leadership by turning our combined network and spectrum assets into a truly superior wireless experience, an experience that T-Mobile becomes famous for, and one that's here to stay. Second, unlocking the potential of our scale and the superior cost structure that results from our network assets to deliver ongoing value leadership while also expanding margins. And third, delivering the best experiences from the best team as we build on our Un-carrier strategy to make customers happy by rewriting the rules of the industry in their favor. As we deliver on these strategic pillars, we're focused on some simple ambitions, the outcomes by which we'll be measuring ourselves and by which we think you'll be measuring us as well. They showcase our balanced approach to growth and profitability. First, our goal is to consistently and continuously profitably lead this industry in growth, particularly once the major elements of our integration are behind us. Second, translate that growth into an increasingly valuable business, focusing on synergies, scale economies, and cost transformation. And third, we'll do all this without borrowing from tomorrow. We'll continue to make the right decisions and investments to position T-Mobile for long-term success. For T-Mobile, all of our short and long-term goals start with building the best 5G network. It's the underpinning of virtually everything we'll talk about today, and our build is tracking well ahead of schedule, and it's clearly differentiating T-Mobile as the undisputed network leader in the 5G era. T-Mobile already offers the largest, fastest, and most reliable 5G network in America, delivering 5G across more geographic coverage than AT&T and Verizon combined. And our ultra-capacity 5G, utilizing our spectrum depth of 2.5 gigahertz mid-band and above, has been rapidly expanding. While Verizon's 4G leadership may have helped them over the last decade, T-Mobile is positioned to be famous for our network in the 5G era and solidly take that crown for years to come. That's a perception shift that we're laser focused on at T-Mobile, and we're already starting to see the tide turn.
We are the only operator to have deployed dedicated low-band and mid-band spectrum, delivering on the true promise of 5G, with our ultra-capacity 5G delivering game-changing speeds, averaging 325 megabits per second, and reaching 140 million people already in 2021. And we're expanding our ultra-capacity 5G at a remarkable pace to bring those game-changing speeds to 200 million people by the end of this year, expanding to approximately 250 million by the end of next year, and on our way to bringing ultra-capacity to nearly 90% of all Americans by the end of 2023.
We see further growth into 2024 with an expected range of 16 to 18 billion. And long term, we expect free cash flow to be more than 18 billion, above the high end of the original target. And similar to our 2021 guidance, our mid and long-term free cash flow guidance does not assume any material net inflows from securitizations. And while our expectations for midterm and long-term milestones are all above the original merger plan, equally exciting is that this is really a story of cumulative overperformance in every year, delivering cumulative free cash flow through 2025 of up to $65 billion, up nearly 20% from the original plan. So as Mike highlighted earlier, with our increased cash flow, we see the flexibility for substantial shareholder returns, potentially up to a total of $60 billion from 2023 through 2025, all assuming a conservative mid-2 times core adjusted EBITDA leverage ratio. As you would expect, we will always focus on maximizing value creation for shareholders and will assess future spectrum purchases, M&A options, and share repurchase opportunities to create the most shareholder value.
My summary. We actually delivered our CMD promises from 2018. We successfully implemented our superior production model, meaning we completed our all-IP migration with clear benefits regarding customer experience, cost savings, and resilience. We did a very rigorous IT transformation with significant benefits regarding speed, stability, and cost containment. And we further enhanced our integrated network leadership in Germany and Europe and our perception as the 5G company in the United States with clear business benefits. Going forward, we will evolve from a leading telco to an experience-obsessed tech player. And that means precisely 5 things. Number 1, we are moving to a high degree of network automation, hyperscaler-like regarding speed, but telco-grade regarding security and reliability, on the basis of our increasingly cloud-native infrastructures and, over time, disaggregated networks for lower cost and better experience. Number 2, in addition to the digitization of our networks, we continue to digitalize the entire value chain, sales, service, G&A, for better experience and lower cost. To achieve that, we build on the software and data capabilities of our people. Number 3, our integrated network leadership will continue to deliver clear business benefits. We are committed to 5G leadership in Germany, Europe, and the US, and to fiber in Germany and Europe. Number 4, to support our ambitious climate targets and to offset, by the way, the massive volume increase in our networks, we commit to double energy efficiency in our network production by 2024. And number 5, experience obsession. As Srini said, Kunden zu Fans machen guides our consumer innovation. We focus on products and experiences that leverage our superior networks. And I will now go into point number 1, network automation. Historically, automation was like this. We analyzed the process, took out a few steps, and then coded the result into software. Usually the speed gains you get amount to 20%, 50%, 100%. Our new software-driven approach for network automation has a far more significant impact on speed. It was applied first for our new voice production platform, Next Generation IMS in Germany, which is, by the way, a multi-vendor platform, open, fully automated, and running out of the cloud. So what? So what is this cloud-based automation has significant impact on speed? That's what I call hyperscaler-like, but telco-grade security-wise. Practically, the introduction of a new product feature takes 3 months compared to 18 months before. You see, I pursue similar ideas in network technology as in IT. We moved from 90 days for rolling out a software feature into the network to only 2 days. And fixing a bug takes no longer 14 days, but only 1 day. And finally, no night shifts are required. We will move to a very high degree of truly cloud-native infrastructure, 80% in IT and 55% for NT across Germany and Europe. Plus, we will massively increase APIs and microservices, which means further decoupling the architecture. And we will, of course, retire. And if you express that in KPIs, we will further decrease time to market down to 2 months with 100% agile working. Stability will further increase, and the IT spend will go down by at least another 200 million euro, which is a most significant contributor to the message Srini gave: fiber rollout, self-funded. And why can we do that? Because we are driving a capability and cultural transformation. A couple of years ago, and you know that, the tech industry hyped 5G as the solution to everything, including world hunger. And then a few years later, the finance and analyst community challenged 5G as a driver for growth. Now, my conviction is, we are convinced by 5G. We are convinced by the comprehensive benefits of 5G. And I have summarized them on this slide. First of all, following up on what Dominic and Srini said, 5G is the basis for up and cross-selling in the consumer area. Number two, 5G is a key enabler for B2B differentiation and upside potential. By the way, together with IoT, edge, cloud, and network slicing.
So what I'll do today is I'm going to share with you the journey and what exactly have we done, but also more importantly, talk about what happens in the next 4 years in front of us. Well, let me go ahead and get started. So first of all, it's really important to say that the transformation that we put T-Systems on has progressed. And as a matter of fact, hopefully you realize after the presentation, what we have today is a very different company from what we had 3 years ago. Now, let me talk about this new strategy that I keep alluding to, which is unevolved from where we were. There are 5 pillars to this new strategy. Number 1, you'll hear me say this over and over again, focus, 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 focus. Just like Tim says, digitize. We are about focus right now. And the focus for us is to be the number 1 player in Germany and focused on DACH and other select countries around the world. So we are not spreading ourselves thin by covering every country in the continents. We are focusing where we want to play, with the biggest focus in Germany and DACH as a region. That's number 1. 1, revenue. We are focusing to deliver slight growth. We have that balance point we're reaching between our legacy and our new businesses, our growth businesses, where it's going to pass the 50% threshold, which should deliver us growth going forward. Second, EBITDA growth of 5%. Third, our margin, EBITDA, will expand another 2 points in this planning period. And 200 million in indirect costs, as I described. Cash Capex, we will keep stable. There is no plan to go back again to where we were after we reduced it from about 300 to about mid-200s, and delivering cash contribution positive in the planning period. This is for the new T-Systems. The old T-Systems, we did it. We demonstrated we could do it. This is now for the new T-Systems.
If you look at my presentation, I think I want to leave 3 major things with you that you should remember. That's all. I think number 1, we have built the best telco portfolio in the sector. And this gives you earnings per share growth, free cash flow growth, and strategic optionality. We have no burning platform like in 2010. We will continue with what we have done over the last 10 years, active portfolio management and exploiting strategic optionality. In the US, we want to retain control. In Europe, we will review strategic options for our towers in T-Mobile Holland. And I will explain to you in a minute why. Number 3, we don't have a share price or chief share price officer. We have 8. This management team has aligned interest with our shareholders. We won't shock you, and we want to build out our lead. You can trust us. Since closing, another 12 months have passed. So what has happened since then? And I'm just focusing on the stuff that we as a shareholder were focusing on, not on what Mike clearly claims as strong operational performance and improvements over the last 12 months. Number one, we conducted a successful management transition from certainly one of the best management team, if not in the US alone, with John and Braxton leaving the firm, succeeded by Mike and Peter Oswaldik. We renegotiated, as you know, the exchange ratio, and we negotiated a valuable call option that we currently enjoy because it's at $101 while the stock is shortly below 140. We have been conservative enough on synergies. We've learned our lessons out of Metro PCS, and we'd like to outperform expectations. You've seen that we have increased synergy estimates and that we have put T-Mobile US in a position where even on a balance sheet basis, they can compete with the big guys. The target price has been increased over the last 12 months from $102 to $106, which gives us great hopes that everything is going to improve in the future even further. Now look forward. What does it mean for our shareholders? T-Mobile US is a sustainable, well-positioned company. We believe there's a lot of further value creation in front of us. Therefore, retaining control is a priority. And most importantly, it will certainly be financially attractive. Having said that, control in itself is not a value. However, we'd like to be invested in good assets, and as shareholders, we like to determine few things in order to avoid the Vodafone-Verizon trap. We want to bring our expertise to the table if it comes to capital allocation, M&A, capital structure, and as we have demonstrated to you in the past, to pick the right team on the bus. There's plenty of optionality around our US stake, and we have time.
Message number one, I think we will prove that we have promised what we committed to at the Capital Markets Day in 2018. And Thorsten used that phrase, even on the critical metrics, whether it's being Capex or whether it's being cost reduction, you can trust us, we deliver what we promised. Second point is, if we're looking forward, we see a lot of growth. We're seeing top line growth, we're seeing big service revenue growth, but when it comes to bottom line growth, that's even higher. And I will get to this when it comes to EPS or free cash flow growth. And it will happen across all segments. So we're not only relying on one segment, it's basically broadly adopted by all segments going forward. So let's start and reviewing the past 3.5 years. And let me start with Ebitda guidance, IDC guidance, and cash Capex guidance. And what you can see on the chart is we promised an adjusted Ebitda growth of 2 to 4%, and the prediction until the end of the year is basically saying 4.4 on adjusted Ebitda. If you just focus on core Ebitda, it's even higher at 6.4. So we bet that target. On the business ex-US, meaning on our operations in Europe, we basically guided at 2 to 3%. We will end up having a 3%. The 3% Ebitda growth is very much driven by the IDC reduction in the past 3 years. Going forward, we expect a more balanced contribution coming from net margin and cost reduction. Second point is on IDC reductions. You may recall, as we reviewed at the Capital Markets Day in 2018, how we were at cost reductions. We missed on that point. So we renewed our commitment to another 1.5 billion net cost reduction in indirect cost, and we're happy to say that we will beat that target by about 200 million to 1.7. And on cash Capex, that was also a highly debated figure. We said peak is going to be in 2018, and from there onwards, we have a stable development going forward. And actually, I have to report back that holds true. This is my favorite chart. What you're going to see is what is our prediction on free cash flow growth, adjusted EPS growth, and ROCE growth over the upcoming years until end of 2024. Free cash flow is expected to grow from 6.3 billion at the end of 2020 to north of being 8 billion this year, to be greater than 18 billion in 2024. That translates to a CAGR of 30%. Obviously, the breakdown, and we've heard that yesterday, is very much driven by T-Mobile US, by contributing more than 14 billion to this overall result. But also we see in free cash flow growth coming out of the European business. So let me dwell on this a second and do a little bit of a fast forward. Let's assume we're on the year 2024 and we have achieved the majority with 50.1%. Then out of these 18 billion, half of the 14 billion belong to DT, plus roughly out of the 4 billion, if you exclude the minorities, another 3.5 billion from the European operations. So 10.5 billion euros would be allocated to DT shareholders. This is more than 2 euros per share and an increase of more than 100%. Second one, on adjusted EPS. Look, we expect that adjusted EPS is growing from 120 to greater than 175, and that translates to a 10% growth. There's going to be a small dip, and this is basically between 2020 and 21. This is basically can be explained by the positive impact which we had on the fixed price option in 2020. But what we're going to see is we're going to see a constant increase of Ebitda growth and a constant decrease of depreciation, which basically gives you an indication that this growth is not back-end loaded. It is coming with steady growth starting from 2022 onwards. So therefore, I think, again, this is a greater 175 prediction, and it's coming more in a linear curve rather than a back-end loaded curve. Third one is ROCE. So you've seen our ROCE being 4.6% end of 2020, and we expect it to grow it north of 6.5% in 24. So let's move over to the US and go quickly through this. And you've seen that numbers already. The US is supposed to grow from 21 billion euros in EBITDA to 27 or 28. That is basically a 7% growth. And if you just exclude the handset leasing for a second, the core EBITDA will grow at 10%. The cash capex is actually peaking in 21. And you've heard Peter saying yesterday that he's expecting the 24 level, which is 8 to 9 billion already in 23. And also, we talked about the massive free cash flow, which is coming from the US. So on CapEx, as I said, the peak is in 2021, and we will return back to normal levels starting from 23 onwards. Let's move over to the European business and take a look how this will evolve going forward. So what we're going to see in the European business is a steady growth of EBITDA, growing from 14 billion in 2020 to 15.3 billion in 2024. And that relates basically to a 2 to 3% CAGR growth. What you also see is that this EBITDA growth is supporting our larger Capex envelope of 8.2 billion by 2024 in the European business, while it still allows to grow free cash flow. Next topic is digitization. As you can see on the chart, we are taking a fairly holistic view on the digitization within DT. And we're basically taking a look at all relevant parts of the business, being in the front end or in the back end. And we're continuously optimizing and digitizing as we move forward. We have a program right now across the most leveraged activities being defined between Germany and Europe. We track it from 2020 to 24 onwards, and we have a consistent review process on how we're making progress on these key initiatives. Let's move over to the dividend policy. So, as I said, In 18, we introduced adjusted EPS as the key metric, and we said the dividend payout should orient itself according to that growth, and we had a floor of 50 cents a share. We basically moved that up to 60 cents. We have paid out dividends in the vicinity of 60 to 70 cents over the past 4 years. And what we're going to do with the dividend policy going forward is that we're going to keep the EPS as the key metric, that we're going to keep the minimum payout to give you a guarantee on the payout, but we're moving away from EPS growth to a payout ratio. Given the EPS growth, which you have seen, which was about 10%, you can assume that this dividend will be accretive and grow over time. Let's move over to the debt side. Again, what we said is we remain within our comfort zone, which is 2.25 to 2.75. And we said at the Capital Markets Day we will be back into the comfort zone after 3 years. This assessment excluded basically 2 things: the shareholder remuneration in the US and also our ambition to achieve 50.1%. If we are doing this with the shareholder remuneration and the 50.1%, that will obviously slow down the deleveraging impact, and therefore we will be back in the comfort zone by end of 2024. The peak of the leverage is expected to be this year, and then it will gradually go down. And bear in mind, if we are getting into the comfort zone in 2024, by the end of 2024, the share buyback in the US officially continues into 2025, and you heard Peter saying it will not stop after 2025 either. When it comes to our maturity profile, you see that actually the average maturities which we're going to have over the next 4 years is 3.6 billion. So it's very balanced. You don't see any spikes. By the way, that holds true for the maturities also beyond 2024.
Remember on the last Capital Markets Days, I was on stage at the end and I was talking about the European market, a single market. I was talking about the regulation which is going to improve. I was talking about the opportunities of digitization. I was talking about the opportunities one might have in the US with a deal. And I was talking about growth. And you know, at that point in time, I was sharing a lot of optimism in an industry which was in really dire states in a very pessimistic and negative approach. And honestly, now 4 years down the road, we delivered. We were able to deliver a company and to show you a company which is growing. I will do that again. And I do it again. I know that now we have accelerated on what we did. We have delivered on a lot of things. And we even say our targets should be higher than they were the last time. But I do that again because I'm optimistic about the opportunities around digitization. I'm optimistic about the setup of Deutsche Telekom and its portfolio where we are today. I'm very optimistic about the team and the attitude, the culture Deutsche Telekom has evolved over the last years, which gives us a lot of self-confidence, you know, to tackle the challenges which is lying in front of us. And therefore, I hope that we were able to share a bit of that optimism around that we believe, you know, we have a really right to play, and we should be the choice, you know, the pick which you should choose in the telco industry going forward. Leading is not for me something static. Leading is dynamic. If we talk about leading European telco, leading is not something which is a benchmark to others. Leading is an attitude. It's the way how we're striving all the time to do the best for this company. And I cannot promise you that we will deliver on all these ambitious targets which we have laid out. But I can you promise one thing, that we have the attitude to always do the best to achieve what we have committed over the last 9 hours. This is our playbook for the future. And we are trying to play that playbook as best, with a leading attitude going forward. And exactly that is, let's say, what we are about. It's about the passion for our brand. It's about the passion for the purpose of what we are doing for societies. And the good thing is, we are not stretched. We have one clear area where we are. We are the transatlantic telco. We are in one hemisphere where we can play this playbook. This is a big advantage, not only from a risk and a volatility perspective, but even as well from an identity perspective. So we hope that we can convince more buyers into our stock, more people who trust in Deutsche Telekom, the transatlantic leader.